My presentation was about what are the main trends that we're seeing in ESG and responsible investing post-COVID, and where has the industry landed and how it's thinking about some of these issues, and of course what are these issues that it's talking about.
We're seeing a significant acceleration in interest across a broad spectrum of the economy in terms of sustainability of businesses, and so that's true from the consumer, who I believe has been a big driver, where the provenance of the products they're buying is very important to them. But it's also becoming apparent that from investors and capital providers that they want to know that they're going to get a good return on their capital, but also that there is generally good practices within the businesses that they're supporting. And we're seeing as well that other stakeholders, staff for example, are wanting to work for companies that have that overall sustainability lens at heart, and so to attract staff and keep them, that's becoming increasingly important. I think the shift has been one from where when I went to university, the view was that companies existed to maximise shareholder wealth, and I think the view today is that businesses need to be there for broader stakeholders, and including the community, that they have a role to play in terms of addressing the large issues for society, and naturally environmental issues are at the forefront of that. So I think it would be a mistake for businesses to believe that they can ignore these trends, and I don't believe that the acceleration of this interest is going to disappear anytime soon.
We're seeing greater regulatory attention in ESG and responsible investing disclosures. We're seeing an increasing number of data providers and data points which fund and asset managers are using in order to inform their strategies. And we're seeing an increasing investor awareness in the space, all of which has led to a larger number of ESG related products and more cash flows moving into the space. Greenwashing at its core is misrepresentation or incorrect marketing, where you're stating that a security or a product or a company is greener or more sustainable than it really is. So what can managers do to avoid this? Well, there can be more of a reliance on quantitative or objective scores. However, something we talked about in the presentation is the difficulty to produce these scores in the first place. As a result, it's quite important for a manager to state what the objective of the fund is. When they say something is sustainable, what exactly does that mean? As opposed to just marketing buzzwords. And also, what types of ethics are they trying to target? Not everybody has the same ethics, and as a result, something that's considered ethical for one investor might not be for another. So it's all about transparency.
I don't know that there should have been any new news in there. There's been a reasonably consistent flow of information that they've nicely summarised and highlighted to us. I think the reaction probably is just a realisation that, if anything, we probably aren't moving fast enough, and so that's the challenge. It's a big task. The longer we take to move, the bigger the challenge we're going to have. So that would probably be my take on yesterday's report.
Markets tend to be quite forward-looking, so from a pricing and valuation perspective, a lot of these numbers, I won't say were perfectly known, but were anticipated to some extent. So from a valuation perspective, not too much has changed. In terms of chatter and awareness, this is definitely going to increase debate and chatter, I should say, around how countries around the world are dealing with climate change, thereby increasing awareness and hopefully more interest in the space. It can come off quite daunting. We're trying to change the world when we're talking about climate change. It's quite a macro, large-scale thing, but it's all about solving the little issues which make up the big elephant in the room. It's also about knowing what we're really doing. So quite often we conflate investments in the secondary market, which is really just a transfer of money between investors, with the primary market, which is really there to fund climate change efforts. And that's something that the lack of knowledge in the space, or the lack of communication in the space, I should say, is something that I feel we need to work a little bit more on when we're talking about climate change.